Bhanu Baweja, Managing Director and Head of Emerging Market Cross-Asset Strategy with UBS Investment Bank, joins us from London. Bhanu, good morning and thank you for joining us. What is your call on emerging market equities? Do you think the outlook for emerging market equities has changed after the kind of indications you've got from Fed?
I do expect earnings to pick up. Earnings for the last 2 years have been absolutely dismal. We're not looking for a very big pickup in EM earnings. We're looking only for 7 to 8% earnings growth, which in fact is sub-consensus. But we are looking for an earnings pickup. We think earnings improve 7 to 8% in the equity space, and that's pretty much exactly the kind of total return we expect. So we're not looking for a big re-rating in EM equities. The gains, in other words, are not going to come from multiple re-rating. They're going to come from modest earnings growth. Valuations on the fixed income side are quite expensive. So while fixed income is not a broken asset class, it is at this point a more expensive asset class than EM equities.
Bhanu, hi, morning. So what about India, which faces a large risk of upcoming elections as well? Will equities be the preferred asset class in 2014?
Yeah, we do think that bank credit is a better asset class than equities in general, and particularly bank equities in India, and that's one of our top recommendations. We think short duration bank credit is a better investment than bank equities. The elections present a large risk for India, and it's a binary risk. It's a very young population. A lot of people, new people are going to come to vote, and the margin of a change that can lead to a massive upside for the market and that can lead to a downside of the market is not very high. So in terms of confidence and predictability of the election, it's not very high at all. So we think that at this minute, given what's already priced, which I think is good news in terms of government change, we want to be a little more cautious, and we want to be away from risky equities which are going to be in harm's way if the Fed tapers, which specifically is the financial segment of the equities, and we'd rather be in the fixed income product, but not high duration, but low duration.
But Bhanu, the basic bedrock of the risk-on trade is global liquidity. Can emerging markets do well if Fed does not taper, and what is your assumption on that?
We do think that the Fed tapers in Q1 next year, and I don't think that EM equities do well only if the Fed doesn't taper, because it's not just a liquidity call. Liquidity is important for emerging markets, but as is growth, and we think that next year is going to be a year of slightly better growth. We're looking for global growth at 3.4%. Mind you, that's still sub-trend growth, but we've got to remember that emerging market equities have derated against developed market equities for very good reason for the better part of 2 years now. So they have derated a long way. It's difficult to say that emerging market equities are very expensive. And given that we do expect better growth, we do expect slightly better earnings as well. I think the issue is with EM equities is that over a long period of time, you're not likely to see significant earnings growth. I think the consensus on earnings on a 3-4 year horizon is still too high. I think EM equities as an asset class is compromised because you're not going to be able to get very high earnings, but that doesn't mean necessarily that you will see negative returns in equities all the time. We've seen bad returns through this year, including the currency side, and I think next year we can see slightly better returns, and that's based on better forecasts of growth in the US, better forecasts of growth in Europe.
Bhanu, coming back to India, you expect the central bank to continue tightening, especially when inflation continues to be very high. Is that right?
Yes, I do. There are many central banks in emerging markets where, despite weak growth, you are seeing high inflation. I mean, that's precisely how you define an emerging market, where the link between growth and inflation is not necessarily driven only by the aggregate demand curve, where supply inelasticities can lead to higher inflation even in an environment of low growth. I think the central bank in India is doing exactly what it should do, is to say that, look, we really need to bring inflation expectations under control out here. And so far, although it has tried quite hard, it hasn't been able to completely kill inflation and inflation expectations. So I think they will need to do more.
Right. In your report, you find Indian banks expensive due to rising NPL. So what is the concern here?
Yes, we are quite worried about the fact that growth in India has not improved at all. Specifically, the manufacturing sector seems to have been in a very long-term slump, and manufacturing sector is precisely the most important sector because that's the only sector that can absorb the kind of labor force that is becoming available to the country every year. If there's any chance of that country being able to bank in its demographic dividend, it has to be through the manufacturing sector. The fact that that has been as weak as it has really does worry us, and there's a lot of capacity that has been built up recently in certain industries, and we do think that NPLs will continue to weigh on that, continue to weigh on that sector, and that's why we don't like the banking sector in Indian equities right now.
Bhanu, what about the currency then? Do you expect the INR to weaken from here?
Yes, we do. We do think the INR weakens from out here, but mind you, the forwards market already predicts the INR weakening. At this minute, we don't have a short on the INR because when you look at the forwards market 1 year out, we think the market is already saying 67 to 68 against the US dollar, which I think is a pretty high bar to cross. It's not impossible that you see it being crossed through the year, especially as we expect euro dollar to move towards 125. We think the INR also weakens, but we have to remember that a lot is in the price in the forward market as well.
Bhanu, great to have you on ET Now, and thank you for joining us.